What's up guys, it's Nathan here. Today we're going to look at the Reserve Bank of Australia's upcoming decision on the interest rate movement and what they're going to do in April's board meeting. The Reserve Bank of Australia has indicated its willingness to pause their tightening cycle depending on various factors such as the labour force, retail sales, inflation, and NAB business survey data. We'll examine these factors and the potential scenarios that could play out, as well as considering the impact of external factors like we've seen with the collapse of some banks in Silicon Valley Bank overseas. Let's start off by looking at the Reserve Bank's position. The Reserve Bank of Australia Governor Philip Lowe recently stated that in a speech on monetary policy that now we're in restrictive territory and they are nearing the point where a pause in interest rate increases may be appropriate to assess the state of the economy. He noted that there are 4 key domestic data releases which would inform their decision in April. They're looking at the labour force, retail sales, inflation, and the NAB business survey. A stronger than expected set of numbers across these releases may lead to a rate hike, while a weaker outcome may result in a pause. And if you find value in these videos, please consider hitting that subscribe button as it really helps out the channels. And a big thank you to all our subscribers for your support. Inspires us to create more content we hope you enjoy. Let's look at the labour force and unemployment rate. The labour force survey and monthly consumer price index indicators are considered the most critical release of data among the 4. Governor Lowe mentioned that around 100,000 people or more than usual had a firm job offer and were starting within 4 weeks, and the Reserve Bank would look for evidence of this in the February data. It's important to note that the economy needs to generate employment growth of around 25,000 jobs per month to keep unemployment rate stable. In February, the unemployment rate is expected to print at 3.7% compared to the market median forecast of 3.6%. Job vacancies suggest that the unemployment rate will likely trend up from here. Retail sales. The monthly retail trade figures have been volatile, with spending patterns shifting over this festive period. Consumers have increasingly taken advantage of Black Friday and Cyber Monday discounting, which has led to a large upswing in monthly spending. Internal data at the Commonwealth Bank of Australia points to contraction in retail sales for February of 0.3%. Cooling in demand for retail items will help drag inflation lower in 2023. The February NAB business survey will provide insights into the conditions and pricing pressures in the private sector. Business conditions have softened throughout Q4 of 2022, but showed strengthening in forward orderings, unemployment, profitability, and trading in January. The February survey will clarify if this strengthening was an anomaly. On the balance, January is expected to be an outlier compared to the trend in Q4 of 2022. Monthly CPI indicators. The Reserve Bank of Australia has elevated the status of the monthly CPI as a significant indicator for assessing inflation. The monthly CPI indicator fell by 0.4% in January, with the annual rate dropping from 8.4% to 7.4%. The February print will be of particular importance as domestic and household services are only measured in the second month of the quarter, which provides a timelier barometer of services inflation. The collapse of Silicon Valley Bank adds an additional layer of uncertainty for the Reserve Bank's decision in April. The impact of this event on the Australian economy and financial markets may influence the Reserve Bank's actions in response to the domestic data releases. At this stage, one final rate rise of 25 basis points has been penciled in, potentially bringing the cash rate to 3.85% in April's board meeting. However, the Reserve Bank of Australia has shifted tone, and the uncertainty surrounding the data releases make it a close call between a rate hike and a pause. The Reserve Bank of Australia's decision will depend on data releases and their assessment of the economic outlook. With the domestic data releases and the impact of external factors such as the Silicon Valley banking collapse, there is a degree of uncertainty in predicting the Reserve Bank's next move. We did see recently the European Central Bank had increased their cash rate by 0.5% and said that they weren't focusing on the external factors at play and were more guided by the data, which means could the Reserve Bank follow suit and do the same and press on with the rate rise in April? There are several potential scenarios that could unfold depending on the release of data and other factors. If all data releases come in stronger than expected, then it is likely that the Reserve Bank will hike the cash rate in April. If the data releases are weaker than anticipated, then the Reserve Bank will likely put a pause to tightening cycle. In the case of mixed results, with some data releases coming in stronger and others coming in weaker, the Reserve Bank will have more of a challenging decision to make, and their choice will ultimately depend on their assessment of the overall economic situation and potential risks. I guess the RBA's decision in April will be heavily influenced by the upcoming data releases, as well as external factors such as the Silicon Valley Bank's collapse. So what do you think will happen? Will the Reserve Bank raise rates in April? Leave a comment below. And did you know here at Hunter Galloway, we get home loans approved. So if you're looking for a great mortgage broker, we can assist. We work with people right around Australia. There's no cost for our service as a mortgage broker. So hit us up at huntergalloway.com.au where we can do a free assessment, or call us on 1300 088 065, and we'll see you next time.